Matt, and we're going to get to Garrett about that. Today is the day. All of our minds are on the Fed meeting and what is going to come out of it. For someone who might have their head in the sand, Garrett, what are you expecting to come out of this meeting?
Oh, yes, monetary policy, something that society keeps so secretive that I had to pay to learn about it. Um, the Fed today, when you're really breaking this down, 10th rate hike going up to 5%. We haven't seen numbers like this, obviously, in more than a decade. And the whole question now centers on how much more will they go? And I know that some people are sitting here saying, well, it's impossible for them to continue moving from above 5% to 5.25%. There still is room. And I know that that sounds insane in the state of the banking crisis. The people who recognize this, who recognize that 5.5% is still possible, are the ones that are effectively still holding so many of the cards in this market. The Fed has to focus on wage growth and the wage issues that are at hand. That's why Friday's jobs report is going to be so critical. ADP coming in today, those numbers were higher than expected. So when we look at the Fed meeting, that is where my focus is, whether or not we're actually going to be moving higher. The broader market is going to focus on whether or not we pause and when we start to cut. That's the narrative that dominates the entire portion of the backside of 2023. If you thought that it was fun wondering how much the Fed was going to raise rates, going over, back to January of last year, every single meeting in the whipsaw, now we flip to, will they cut? Will they cut? How much will they cut? Oh, no, they didn't cut. Why didn't they cut? Why didn't they cut? An admission of the state of the economy would be found in the cuts. Obviously, we have a lot of concerns about this banking crisis. The Fed knew about the possibility of bank failures back in February, and they hiked anyway. They knew about the potential failures of what was happening in the Bank of England last year, and they hiked anyway. They knew about what was happening in the cryptocurrency markets, and they hiked anyway. They are choosing a banking crisis over rising inflation. And that is what nobody wants. Nobody wants to be Arthur Burns. Nobody wants a repeat of the 1970s. So they are surgically selecting to continue moving higher. And the focus on wage growth is critical because this is what Powell has been talking about. You now have two very important people within the Fed, the very dovish person in Austin Goolsbee and the very hawkish in James Bullard, trying to dismiss the wage growth. Powell is lightning focused on this, laser focused on this. Forgive me for mixing up my metaphors. So as I look at this, I think that the big focus, a lot of the questions are going to center around the banking crisis. They're going to center around when are they going to pivot. For me, the question is, are they done? Are they done? Do they see anything in the data that would suggest on the inflation side that they can begin the process of unwinding all of this? Because the further they move higher, the more damage there's going to be on the backside. Remember, in 2008, they said there was going to be just a mild recession. And 8 months later, the entire financial market, the entire financial system had fallen apart. It doesn't feel like it's that bad, but you're starting to see the narrative turn into this.
Yes.
Turn into this. And it doesn't matter if the data is bad. It doesn't matter if the balance sheets of the banks are okay. The only thing that matters is the narrative. And if the narrative continues to get uglier and uglier and uglier, that's how you end up with healthy banks collapsing. That's how you end up with good real estate that ends up moving 10, 15, 25% lower. And I do caution people on this because I've seen this happen so many times. You hear hedge fund managers, you hear other managers go out there and they start banging the table and they start saying they need to do X, Y, and Z. Well, ask why those fund managers are demanding that. Is their portfolio exposed in any way? And then secondly, look at the other side of this. If they are saying that it is worse than it actually is, they are trying to drive down the price so that they can buy it for cheaper. That is not that complicated. That has been the narrative of this market and the way that we have behaved financially and psychologically for 3,000 years.
Yeah, it's the same story, but different chapters this time. You're going to be
Different
trading the
characters.
Fed live. Yeah, different characters. You're going to be trading the Fed live with Kenny at 1:45 today. And you're also going to be on Morning Momentum at 9:30. So catch Garrett for some more trading then and some prep ahead of the Fed, and then also live trading with Kenny. Garrett, any final words before we get to Gabe's chicken coop?
No, I think the key thing is when you're trading today, 2 o'clock, there's probably going to be a 25 basis point hike that's largely baked in. For 30 minutes, you're going to see the amount of people who have been betting on no hike. That is eventually going to go away out of the Fed fund futures. But at 2:30 to 2:35, that's when Powell will speak. He will talk for 5 minutes, and then he will take Q&A. Typically, what we have seen, whatever direction the market goes from 2:35 to 2:37, that's the direction for the next 40 to 45 minutes. There typically isn't anything significant that is said outside of that window that would lead the market in another direction. You want to be trading range bound, you want to be focusing on deviation bands, and you want to be active in this market. It's a deep possibility that this market does honestly surprise to the upside for the rest of the day. That has happened from time to time, but momentum remains negative, and if this market screams higher today, be very, very cautious about tomorrow. Maybe an opportunity to move to the downside into tomorrow, heading into that Friday jobs report.
Awesome. Like Garrett said, you want to trade it. So be there at 9:30 for some prep with Garrett. And at 1:45, all here in the main room, Kenny and Garrett will be trading the Fed live.